Hello, my name is Brehon Mills, and I would like to welcome you back to the channel. What's up, family? I hope you guys are having a phenomenal week. Now, if you've been watching this channel, you know I've been talking about trading different stocks or long-term investing in different stocks or just simply placing call options or put options on certain stocks. And when it comes to succeeding in the game of trading, there are many ways that you can go about it. Now, there are some people that have their settings set up on Thinkorswim to chase stocks that have a high momentum. And some people like me, I pick 5 to 10 stocks that I can consistently follow. I can learn their trends and I can begin building relationships with those stocks. All right. Because when you get a chance to watch the movement, the price action of a stock day in and day out, you have a better understanding of what the future expectations are for that stock. And Nike is one of those companies. Now, if you take a look at the chart is set up beautifully. Now, we had a nice run up towards the end of the year. Then we had a pullback, run up, pullback, run up, pullback. Now, what do you think is going to happen next? And it's just that easy. See, when it comes to understanding charts, building relationship with charts, all you have to do is just take a look at patterns, because certain patterns repeat themselves over and over again. Just remember that patterns repeat themselves over and over again. When you're taking a look at stock charts, try to identify certain patterns. All right. And also gain an understanding of the candlestick patterns. Now, when we take a look at the chart here, we can see that crossed above this 20-day moving average. Man, it had a beautiful run up. Then at the top of the uptrend, we see a hammer candle forming. And we always know that this could be a sign of a potential reversal in pattern. But we need that following candle to be trading below the hammer candle. And that's what we had. So we had a nice reversal of pattern. We had a nice downward trend. And then we have here a doji candle. All right. And this is a candle that represents indecision or potentially a reversal in pattern. All right. We need the following candle to be trading above or closing above this candle. What we have? Hammer candle. Again, the hammer candle also at the bottom of a downtrend is a sign that there could be a reversal in pattern. So once you begin looking and understanding the movement of charts and candlestick development, you can succeed over and over again. Now, I know people that specifically look for specific candles. There are some people that just look for doji candles. All they want is a doji candle at the bottom or the top of an uptrend. Again, doji candle sets is a sign for indecision. So a person may just jump in, set their stops. So if it does fall below a certain point, they're out. Or the following day, if it gaps up, they're in. They're in the position and they have made some modest gains. All right. So when we learn how to play this game, we could set ourselves up for success over and over again. So now let's take a look at Nike. Now, as we see, it's been just a seesaw effect, right? Up, down, up, had some sideways trading, down, up. What happened? Down. So now what we have here, all right, nice bullish candles, nice strong. This is a nice hammer candle, followed by another hammer candle. All right, now we could be $1 down today, but we could be up another $1 tomorrow. But again, we can see here that based on the market, and based on the sentiment of these candles, this stock, this price action of Nike, it's trying hard to get back to the 20-day moving average. It's trying hard. We had the nice bullish candle at the bottom, another strong bullish candle, another bullish candle. We are trying to get back to the 20-day moving average, and we will get back there. You can see it. We do have the crossover on the oscillator going down with the momentum going down, but as we can see here, the oscillator is starting to turn a little bit. We had a green candle at the bottom of the MACD. Now, it's basically saying we do have some positive momentum coming back into the stock. It's more momentum coming into the stock than leaving the stock. So that's a good sign. So hopefully, let's see if we get another green candle. But again, this is another opportunity where we can get in, we could play some call options, or we could just buy the stock outright and hopefully ride this thing back up to 137 by the end of this week or the end of next week. All right, now, bad news could change everything. All right. Nothing is guaranteed. And again, 75% of trading is done by computers. All right. So I know if you watch my videos, I'm going to say the same thing, and I'm going to repeat this same thing over and over again until you have it stuck in your head that this is the way to go. And if you follow these simple strategies, have basic common knowledge, you can put yourself in a position where you can succeed over and over again. All right. Now, let's take a look at the call options. All right. So what I have here is April 16th, which is a couple of weeks away, call options. And as we scroll down the screen here, we can see the 140 call option has an open interest of 16,806. The 141 call option has an open interest of 10,267. So this is where the action is. The current price is 132.75. Basically, with call options, you are setting a target price. So it's basically like gambling. You are betting that the price will hit 140 or 141 by the date of expiration, which is April 16th. Now, remember, you don't need Nike to hit 141 or 140. All you need is for the stock price to increase in value. That's all you need. As the stock increase in value, so does the value of your option. All right, so does the value of your option. And the reason why I like going 14 days out, 30 days out, 60 days out, 6 months out, oftentimes you are up against time decay. So when you do, time decay is basically every day the value of your option decreases. All right. So if you select a option that expires this week, you are in a war and a fight against time decay. So at the open, the value of your option is going to automatically be worth less. So the value of your option will decrease, and the price of the movement of the price needs to be much more drastic. All right. So if the price of Nike is 132.75 and you have an option that expires this week, it can actually go up 50 cents or $1, and you lose money in your option. The value could decrease, but it can go up $3, $4, or $5, and the option of your the value of your option will explode tremendously, right? It would increase in value greatly. So again, this is why I like doing options a little further out. Now, it is a gamble, but when you have prices that move big time, for example, like Tesla. Tesla stock may move $20, $35 within a day. It may move $40 in a day. That's a lot of price action. So you could easily put yourself in a call option that expires at the end of the week, but also, man, it could drop $48, $50, and you can lose 40, 50, 60% of your value of your option in a blink of an eye. All right. So again, always be smart, be willing to place call options on money that you can lose, because there's always a possibility that news could be bad and it could tank the market. So always be aware of that. But again, for the week expiring April 16th, I do like the 140 call option. Now it's the midpoint is 95 cents. Now if the price is down at the start of the market, that value may decrease a little bit. So it's 95 cents, but hey, when the market opens, that may be at 75 cents. So we can wait, we can see how things turn out. All right, but if you go down here to the 143 call option, look at this. The price of this was up 39.53% at the close yesterday. That is a nice gain. That is a nice profit. So again, you can go further out if you like, and you could potentially make more profits there. All right, but again, be careful with your call options. That's what I like. I do like that. That 143 at 56 cents. That's going to be down a little bit more if the market opens in the red. All right, but 141, 140 is where all the action is right now. Okay, cool. Now that's all I have for you guys today. It appears that Nike wants to get back to that 20-day moving average. We're going to continue watching it. Once things open at the open, I may do a call option. I'm very, very optimistic that I will do one. All right. But again, I hope this video added some value to you. Now, if it did, hey, please leave a like, hit the subscribe button, keep coming back for more wealth building information. Peace.